Um,
get this webinar started. So there you go. People will start coming in the doors, which is good. I'm excited about this, Ryan. So it's gonna be good.
it's
By the
always a
way,
blast.
our attendance thing that we did that includes people watching in a big group or just people that actually logs on. There's the question.
I mean, if you have anyone in a group, you let me know. All right, there you go. We'll
Yeah,
see. We'll see.
we'll see. Where's my
If you need to pad the numbers to.
there you, there you go. I'm sure you would appreciate that. So that's good. So we got the chat open, which is good. We'll do like we normally do, Ryan, where I just kind of monitor the chat for you and give you an idea what's in there and read off some random questions or ask random questions myself, which
Love
is
it.
good. Yeah, I actually, and it's funny because you did mention something when we did this live in Lake County that something about the veterans
Yeah, the
discount
disabled
waiver.
veterans
Yeah,
exemption.
for counties. So I was kind of curious about that because I hadn't heard that that was an issue in some of those other counties. So we'll definitely get into that. But
We will one of my example slides that'll be in there, you'll see is again, it's the I use it to get that conversation rolling because it's a very unique it doesn't come up a lot, truly, and it's definitely um interesting.
well, I definitely used the fact that that it's not a blanket waiver when I was out at a real estate office earlier in the week to say, hey, you guys think it's a blanket waiver? It's not. You want to learn more? Come to our class on Wednesday at 11. Hey, it's Wednesday at 11. I think we could kick this bad boy off. So this is good. We will kick this off and get things started. For those of you who are on time, we do greatly appreciate that. And I'm sure your clients appreciate that too when you're on time. That being said, I'm excited today. We're doing this for the second time this month. We did it live, but we did it so far north up in the Lake County that we decided for some of our South Suburban, maybe some of our Naperville, and even some of our Northwest Indiana who do business across state lines here in Illinois, that we would bring Ryan back virtually. We've had him on now. Is this our third year in a row or fourth year, Ryan?
I think it might be fourth.
Yeah, I think it's might be fourth. Tony will throw that in there. So, and then, yeah, Tony has activated the chat. So that's going to be a great place for you guys to communicate with us with questions that you have for Ryan. This is going to be very interactive. We want this to be about you, and we're going to jump right into the program. We don't have a sponsor today because we didn't do anything regarding lunch. So I want to jump into my introduction to Ryan, and I'm glad that you guys are here because I think you're going to find Ryan as a phenomenal resource. And you're going to learn something today about property taxes, which has become one of the biggest parts of a mortgage payment that somebody has or housing payment they have here in the Chicagoland area. We love having Ryan on here because Ryan not only services every county in the Chicagoland area, but he also does commercial and residential. So Ryan's unique in that regard because a lot of times you'll find a tax appeal attorney that just does residential, only does Cook County. Maybe they do Cook County, DuPage. But if you've got properties in Will, you've got properties in Lake, McHenry, Kane, these are all areas, even Ogle, we've got them, or Kendall County, I should say, not Ogle. I don't know. You'll have to answer that when we get there.
I've got at least one client in Ogle County.
Ah, there you go. So, and one in Kendall County. Hey, me.
Oh, we got a couple
Anyway,
dozen there.
so yeah, this is our fourth year. I'm going to introduce Ryan now. Ryan is an excellent tax appeal attorney, and Ryan, the floor is yours.
All right. Well, thank you very much for hosting this today. Always happy to present and work with you. As Rich said, my name is Ryan Schaefges. I'm an attorney and I focus on property tax appeals. I have been working on tax assessment appeals for about 12 years now. Basically, straight out of law school, I kind of blundered my way into this and I've been loving it. I've had my own firm for about 9 years. I have two part-time employees and I've worked on properties of all types in about 17 different counties, from little vacant land parcels with small bills to eight-figure commercial structures and everything in between. I'm happy to answer questions about pretty much any of those properties anywhere in Illinois, see what we can do, make sure we understand the property tax process, the appeal process, and if there is something relevant to be done. Um, I always like to start off with a little fun information just to show how little people really know about property taxes. And it's not really going to be a quiz, but because it's easier to do a quiz in person, harder online. But
But wait,
this,
we can
there you
have them
go.
throw. But
Throw
wait,
in the numbers.
we could
Ha-
have them put the numbers in the chat for sure
Feel free.
of this beautiful Sears Tower, because I think that's what the old schoolers call it. What do they call it today?
I guess I don't know. I could be wrong. Willis maybe, but Sears is what I grew up with too. So here's a I think probably the most expensive single parcel in Illinois, and their property tax bill has a nice little number. If you wanna, feel free to throw in chat. I got about four of these. They're just kind of fun properties. If you have an idea of how much they paid in their most recent tax bill, feel free to give that a guess in chat, because the number I'll show you here will surprise you. Uh,
Yeah, let's
Willis
get.
Tower, Willis Tower paid last
Oh
year.
no, you did it before everybody put them in the chat.
Oh, sorry. Well, we'll have more in a second here.
Okay,
Um,
okay. We need everybody in the chat, so throw in what
this
the
one, a modest tax bill of $53 million for Willis Tower.
woo.
That's what they paid last year. Um, And so yeah, these are some pretty substantial ones. Now this is where we held the in-person one. This is the Main Street Organization of Realtors in Libertyville. And if you want to
Uh,
take a guess as to what that one would be,
Yeah,
um,
hold on, Brian. Don't put that out there. We want to make sure we want to make sure our chat's working for everybody, because normally we have people saying hello in the chat and we haven't seen any activity. So Tony's trying to find out if our chat is active or if we maybe just have to redirect everybody to the Q&A section. There
look at
we go.
that. We got a
We got
guess.
one.
We got a
We got
very strong guess too, I will
very.
say.
Ooh, don't come on. Don't let everybody throw their
I mean,
numbers.
she's percentage wise, she's nowhere near right, but she's at least in the same ballpark.
Oh, nice. All right, good. Now we got some numbers coming in. Kimberly James says 1.2 million. Angela Allen says the taxes that the Main Street Organization Realtors pay on that building in Liberty, well, not them, but the owner of that
I'll say
building.
whoever owns that building.
Yeah, whoever owns it, they don't own that one. But anybody else got some guesses? Here we go. So
400
uh,
from Karen.
400 from Karen, very nice. Tony, any guesses? I already know, so I can't
I,
like.
I will also say this,
Woo!
Lake County has a property tax. So Lake County taxes things a little different than Cook. In Cook County, they tax commercial properties more than residential properties. So in Lake County, residential and commercial are all taxed the same. And so I use
Ooh.
this as a just to kind of show this building is valued at around $7.5 million. Now, whether or not that is a correct valuation is a whole different thing. If there's any commercial realtors here and they could be like, wait a minute, that's worth a lot more, they may be correct. But I love it. These guys, and now I probably biased things when I showed a $53 million tax bill to start. The actual taxes on this one, since we got a whole bunch of guesses here, everyone was high actually. It's only 211,999. That's what the Main Street organization, that's what the building pays in taxes. And that's for the two lots. There's two pins. One of them is mostly building, the other one's not as much. Here's a nice fun one. Now this parcel doesn't exist anymore, but I'm asking
Aw.
if you know take a stab as to what. Now this is Cook County and it was an active race course. Anyone have any idea as to what they might have paid in property taxes on an annual basis?
It
Because
was
this one,
actually, yeah, it was actually in the news because there was a big debate on where they took those taxes. So, who's got a guess for us on what the old
a-
Arlington Court
and I'll
property
tell
tax?
you, the next slide is going to say after. So the next one is going to be after demolition. So you can take a guess of the before and after the purchase by uh, by the Bears. So
Angela's got 1.2 million. Karen's got a million.
6 million.
There's
We
6
got a care
million.
1 million, 1.2. And
Yeah.
now we've got these are some great guesses because this is Cook County, and
Yes.
this park has, um, you know,
Oh,
yeah, this
Bobby
is
Simon. This
he's
is
going with
good.
six as well. All
There you
right.
go.
And these 6 million guesses might be influenced by what they've read in the news about this property. Because here's what it was actually before it was demoed. It was just under $2 million. And that's what they paid in 2020 and 2021, just under $2 million. And that is an appealed number. So they were obviously actively appealing this assessment.
Got it.
Now, that's what it
What's up?
was when it was an active and running establishment. And now here's, you
Ew.
know, a little bit later. I think it looks much different now still as they've continued to tear things down, but that was a fun picture. So
Now wait a
now
minute, Ryan. That how could it like you're saying the taxes might have went up? That makes no sense. This is just
it's
land now. It's dirt.
it's there's no longer anything going on there. It's just land now, and the taxes have significantly changed. And goes to part of one of the main things to think about when you're looking at property taxes, especially from a realtor's perspective, and you're looking at assessments. It's a really great thing to compare because after this property was demoed, before it was demoed, it was purchased for $180 million. That was a widespread figure everywhere, reported and all that. And that $180 million would have represented a much larger tax bill. However, there was after much appeal and lots of news stories about this, they agreed on a $90 million valuation for the lot, just the lot. And that lot, after it was demoed, had a tax bill of over $6 million. So that's a significant change. But again, that has to do with market, and that is still $6 million based on a $90 million valuation, which is half of what the Bears paid for it. And the argument for that is that there were extenuating circumstances behind that. Obviously, there's not a lot of places they even have the option of building, and there, there's some certain things kind of impacting that outside of just, they're paying not just for the lot, but they're paying for a lot of the surrounding things as well. And so that's why they were able to negotiate it down from below the purchase price. And then my last little quiz is just a property that was on the market for a very, very long time, a modest Highland Park home, and it was on the market, I think, for over 15 years, and it finally sold last year for
Wait, wait,
9.5.
wait, wait. So this is the last quiz. This property is Michael Jordan's property. And is anybody, there you go,
Yeah,
Carlos
I say
knew.
Carlos knew right away.
Yeah, he's like, wait, that's Jordan's place. So it just sold MJ's house. Nice job, Angela. So the question is, what were the taxes on this house? Let's see some numbers in there. What do you guys got? So Jordan's house, Angela threw that in.
Sold for $9.5 million, and we have the most recent tax bill on it. And I will say, I don't know if there is any um, any appeal. There's no public appeal that's been filed on this one. So the
That's
public
crazy.
records show no appeal history. And my guess is any appeal and valuation work was done directly with the assessor on this one, without having to go through a formal process. Um,
Nice. We got some numbers in here
we
ranging from
do.
a low of 23,000 all the way up to 4.5 million. So I don't think the taxes would be that high, but hey, you never know.
This
So
is Lake County, obviously, and so here's the part. It's based on a market value for 2025 taxes, which is the 2024 market value of 4.9 million.
told you.
And we had, okay, I don't know who's closer between Angela and Karen, but look at that. Oh, look at that. Yeah, Karen's 10,000 off. She pretty much nailed it. It's 138,000. And again, no public appeal filed on this one. This one was just, my guess is directly worked with the assessor. And that often happens outside of Cook County. You can't really do that in Cook. It's a bit different, but The Cook County has a formal appeal process with the assessor. Lake County, it's an informal process. And right now, Lake County is open for appeals, and a lot of informal appeals and stuff are happening. I've been working with a couple assessors on some commercial properties to get some stuff like that done. So,
So here's a good question, Ryan. So and this is going to translate. This has been a fun part. We're going to get into the meat of tax bills and everything, and appeals and exemptions and whatnot. But this has been the fun part. But in this scenario, and because I think a lot of agents are they're dealing with clients that are in this scenario. This new buyer who just paid 9.5 million and they're showing market value based on the county at 4.9, they're going to be facing a pretty stiff increase, correct?
so that's a great question. I get that question all the time. Now, most of the time, the assessors in pretty much all of the Chicagoland area, Cook, the collar counties, even further out, they don't chase the sales most of the time. Now, that means they don't say, "Oh, there was a sale price here, we're going to increase it to here." Now, that being said, most of what is done is those sales are figured into their data for the calculation. So, in Highland Park, homes of this size probably haven't sold a lot. So this will probably have some significant weight on valuations going forward. But they don't truly revalue properties except every 4 years. And that's 2023 was the last time that was done in Lake County, and it'll be done again in 2027. But they shouldn't fear an immediate increase. However, in a case like this, they also have to make sure that there aren't partial assessments, right? The assessor could be giving this vacancy relief. Sometimes assessors do that. And again, that's working directly with the assessor. And that's at their discretion. And obviously, a property that's actively listed, sometimes assessors will give vacancy relief. Sometimes they won't. It all depends. Um, but that's to consider. You talk to the assessor, see if that is the case, or sometimes you can look online and verify if it's got a partial value. I did not actually look into that, whether or not this has a partial value. But that being said, they usually don't immediately increase. But again, that
Okay.
sale will be considered. And then in Cook County, they certainly don't increase to those sales. However, they're put into those sales ratio studies, and those certainly will be going up. And
There you go. We got some fun. We can get by this. Oh, there we go. Good. We got the basics. But Tony made a point that yes, that you can rent Jordan's house on a weekly basis for about $23,000 a week if you've got that kind of disposable income. So
who doesn't? Um, so I always like to start out with a bit of basics, and this is just real quick. Property taxes in Illinois are paid in arrears. If you have questions about anything, pop it in the chat. I'm glad chat is active and working. And so if there's any questions, just let me know, and I'll try to either integrate them right into where we're going, or if they're answered later, I'll let you know. But I like to be interactive to answer the things you want to know about. And if you do want to know about that governor thing, I'm going to just give you a quick lowdown. I should have included that. The governor on his property on Astor Street in Chicago has paid $330,000 a year on property taxes for the past many years. And he did, after that whole thing with the toilet happened, um, that was honestly a very common thing that we'll just say a lot of people in that income bracket were doing with the old assessor. The new assessor got rid of that immediately. And yeah, the governor has paid over $330,000 in taxes on that one property, and that's his just on a single property in Cook County. As that's his tax bill. So yeah, and he did for those years he got the relief. He actually paid that back voluntarily. So that was he did that. I mean, voluntarily. There was some exterior pressure there, but he did not like legally. He didn't have to. Um,
right.
so anyway, Cook County is paid in two installments, and that first installment, which is already out in Cook County and already should be paid, is due typically around for early March, and it's sent out in early February. Now that bill is always just 55% of the previous year's bill. It's a straight math problem. Nothing else is considered. If the house is destroyed or burned down or demoed and then rebuilt, none of that impacts that first installment. And that's what I always tell people, because when we do an appeal or we do anything, if you're looking at that first installment for any informational purpose, it doesn't help you. The appeal is always reflected in the second installment. And when you're prorating taxes or considering what the taxes are going to be in the future, the first installment tells you absolutely nothing. They take the previous year's tax bill, multiply it by 50%, 55%, and that's the number. The second installment, which is typically mailed in July. I say typically because during COVID, we had two very long extensions where bills were paid in December. And this year, we have a new extension for a different reason. Um, Due to an IT issue, we're expecting those second installments to come out, you know, some point soon. Maybe
Yes.
August, maybe September. I don't actually have. I don't think we've gotten an update from them. I'm expecting we'll get an update a couple weeks before they're actually published, so we'll probably have a better idea. But that second installment is where they fully calculate the entire bill, and then whatever the bill may be, if it's less, they just subtract whatever it was, and you have a really small second installment. If your property was reassessed and it's much bigger, you can have a huge second installment with very little, with credit given for that first installment. But it's really important to pay attention to those second installment bills. Now, all the other counties, most of them at least, um, just send out a bill, chop it in half, you pay in 2 different months. Those are much simpler to interpret and understand. They're very straightforward. Cook County, it's just really important to understand that fun stuff. Now, here's just an example of a Lake County tax bill. On the right, you can see at the top, they put the fair market value. In Lake County, every property is assessed at 33.33%, and that's what that 263 is. Now, in Lake County, as well as all the other color, I just use Lake as an example, but Lake, DuPage, McHenry, Kane, Will, Kendall, Winnebago, Ogle, pretty much all the counties do this. Um, they're at 33.33%, and they have this state multiplier. That state multiplier is almost always 1. Very rarely will it be increased, and typically if it's increased or decreased, it's right around 1. It's like 1.08 or 1.04 or 0.98 or something like that. It's a very small multiplier. That being said, assessments are essentially 1/3 of market value. And so that's really important to note when you're looking again at assessments versus offers versus asking, so you know what the future may hold for property taxes. It also, all this is publicly available online. Cook, Lake, McHenry, Canewell, they all have that. Um, they show your exemptions. So on here you can see this person is getting the general homestead exemption, and that's it. It even shows you senior freeze, senior exemption, disabled veterans, disability. All of those other exemptions are on there, and it shows you that they're not currently active. And then
Yeah.
that
And then that exemption just on here is just a reduction of the assessed value. It's not treated like a credit where they're knocking it directly off your bill. It's just here's your assessed value in all the collar counties at 1/3 of fair market value minus this homestead at 8,000, and then you've got your 255. Makes sense. I'm just kind
that's
of want
exactly
to
it.
I go walk it through my own brain just to make sense. But
And then we take that assessed value, multiply it by a tax rate, and that's how we get our bills. And there are, you can see there's a lot of stuff into that calculation, but it's really pretty simple when you break it down. And the next, this is an example of a Cook County bill, and this is again the same thing, but this is a second installment bill. And the way they do it is they calculate the bill, and then they say, okay, what was paid in the first installment? In this case, there was no first installment because this person was as a disabled veteran and they had no tax bill the previous year. However, they were reassessed in 2023. And this is something a lot of people don't know about the disabled veterans exemption. This person has 100% disability. They actually live with their child but they're on the deed to the house. And so during their lifetime, they're entitled to this disabled veterans exemption. And that exemption is essentially what most people say is a total exemption, but it actually isn't. It has an upper limit, and that upper limit is the equivalent. If you look under this, if you can you see my mouse here circling
Yeah.
this? So under 2023 equalized assessed value, so we take that again, that assessed value, and in Lake or in Cook County, it's 10% for houses, which is different than the others. But you can see this is an $870,000 house. 10% puts you just about 87,000. Then the equalizer in Cook County, it's a little different. The equalizer is usually fluctuating around 3, and that puts an equalized assessed value at 262. Now, that 262 gets you a total tax bill. But this exemption, or this the equalized assessed value, there's an upper limit for the disabled veterans exemption, and that upper limit is 250,000 equalized assessed value. So in this case, there's a tax bill because their property was reassessed from somewhere in the 600s. They got a big increase to now 870. And so suddenly, for the first time, their assessment is above that cap. And here's a really fun fact to point out because a lot of people don't know this. A, there is a limit on that exemption, and this is it. And for 2023 in this area, it was 19,850. Now, that is never a number. It's not a hard like dollar amount limit. It is an equalized assessed value limit because as you can see here, the tax rate was 7.9%. Tax rates in Cook County vary between 5% and 45%, depending on where you are. So
Whew.
the exemptions are never dollar amounts, they are EAV amounts. Okay. And that's just again really um important. I don't think the limits,
So, Ryan,
Isaiah just asked when that limit was increased, and I don't think that limit has ever changed since the law was created. Now,
really?
yeah, I think this law is recent. I think 2015 was when it was done. 2016 is when it
Yeah.
came into effect, um, give or take. But this that's never changed. And the really interesting part is in Cook County, this property gets an exemption of the maximum amount. If this property were outside of Cook County, the other counties, there's basically a disagreement between the interpretation of this exemption. In Cook County, they say, okay, we'll just give you the exemption up to the amount. In the other counties, if you have a property that is higher, that is valued above the exemption amount, you are no longer entitled to the exemption. So
Ooh.
in this case, if this were, let's say, not in Cook County, but in a different county, then the person would go from a $0 tax bill to a $20,000 tax bill.
Wow,
Um,
that's crazy.
and that would just happen in one installment that they would be expected to pay right away.
Okay.
But
Out
that's,
of nowhere too. So that
yeah,
would be that's kind of scary for the veteran.
it is. And so that is something that's important. Now, again, this doesn't apply. Most houses, $400,000, whatever, 500 doesn't matter.
Sure.
300, 200 condos, really not applicable. But outside of Cook County, if you got someone in a house and it's $700,000, and they're a disabled veteran and they have no tax bill 2, 3, 4 years later, if that house ekes above that 750, then they could have some issues, which
Yeah.
is a bit crazy.
So Ryan, a couple things around that. So I think probably wouldn't be a bad idea for maybe the pack for the realtors to go back and start talking to maybe our legislators to say, hey, this thing should have some sort of inflationary increases to keep up with what's going out with house prices. So that would be great for us either as an association to go back and work with Springfield to see if we can get that adjusted. Now, Carlos did have, and Kimberly, we see your question. We will take care of you, I promise. Carlos had a question as it related to you gave a for Cook County, I think you gave tax rates ranging from 7.5 to 45%. So
Yes.
where would you 45% is bananas. So first of all, my question, we'll get Carlos's question first. Where would you go determine what the exact tax rate is for that particular community?
Great question. So there's a couple of different places you can go. The website I refer to on a daily basis, I'm talking dozens of times a day, is cookcountypropertyinfo.com. That website has a very good overview of assessments, exemptions, tax rates, square footage, all that sort of stuff. It's kind of a quick picture. It's not perfect, but It'll let you know what the most recent tax rate is. There's a little, the website shows up on the right-hand side. It says tax rate, and there's a 5-year look back too. You can click on it and see what the 5-year history of the tax rate is, which is
I
really
have
great for very quick lookups. And the
Yeah,
other area,
I'll have Tony look that up and throw that into the chat.
throw a link. Yeah.
Yeah, say that. Say what it was again. That
So it's cookcountypropertyinfo.com.
Okay, perfect.
And then the other one is the Cook County Treasurer. You can actually just pull up anyone's tax bill on the Cook County Treasurer's website. So you go to Cook County Treasurer, you can look up tax bills. It's again a great resource to see exactly what exemptions are on this property, what the tax rates are. You can look at, make sure it's even paid. It's got all that info right there. Um, so that's a second website. And then the third, I believe on the clerk's website, there is a massive chart PDF that has a 10-year look back of every tax code and that associated tax code's rate for the past 10 years. So you can actually look at that as well.
All right.
Um,
So Ryan, I have a quick question for you. My second question was, where in God's name are we paying a 45% tax rate in
So
Cook
this is where the assessor, I believe, has been working to address these gross inequities, but in southern and southwestern certain neighborhoods, townships, they have a relatively low assessment base. And when the assessment base is low, but the school's budget is whatever the school's budget is, the tax rate then just goes up. And so the issue was for a long time in these areas, houses were selling for 150, but they were assessed at $45,000. It didn't really work. And then you had all these tiny, tiny assessments everywhere. And so the tax rate ended up just going up, up, up in excess of 30, 40, 50%. So I 45, I think the highest I've ever seen was like 45 or 46%. But
Yeah, and I think communities we're referring to, if I
like
in
Richton Park, Country Club Hills,
Country Club Hills,
uh,
like
stuff
Dalton,
like
I
that.
think. Yeah,
Yeah, those
yeah,
are, if you go and look at a property there and you just look at the tax rate, you'll see a very different number. This number here, I can tell you, this is a property, the one in my example on the screen is in Barrington Township. And so, um, and that's just this was a house in Barrington that got reassessed. This is back in uh 2022 when their last, or 2023 when their last reassessment happened, or 22, I apologize.
yeah,
Um and yeah, that was
yeah.
yeah, so those tax
Yeah,
rates are highly variable and can be very important because, as I stated, the exemption is an equalized assessed value. That's a flat number. For the homeowner's exemption, if you can do math here, you can see 7.94%. Homeowner's exemption, $794. That's a 10,000 EAV exemption.
Yeah,
Now,
and
when you're
I want to point something out too, real quick, because I've had clients obviously looking in the south suburbs. We pre-approve them, and maybe they switch from one community to another. If you guys are working with your lenders, preferably us, but ultimately, if you're working with your lenders on a pre-approval, or your client brings another pre-approval in with a lender that you're not familiar with, you should definitely connect with that lender to say, hey, by the way, my client's going to be looking in Park Forest, Country Club Hills, one of these areas where a $200,000 home could have $14,000 tax bill, and you need to make sure that pre-approval is still good because that's probably not the taxes the lender used unless they were smart and knew the communities that they were going into. So definitely double check any of our agents that are working in the south suburbs. Please double check that and make sure. And anyway, we would be good on that because we're very sharp on what's going on in the south suburbs. Now, I want to get back to, I feel like Kimberly, I want to make sure she knows that we didn't forget about her. So she said, what if a homeowner files a certificate of error before the second installment was paid? Will the homeowner see the correction before the second installment is mailed?
Thank you for circling back because that's a spectacular question. Love it. So there are this is very interesting. Cook County has um, a deadline for applying. So if you apply for your exemptions on time, they will be reflected in the second installment. If you filed a certificate of error, they will not. But the assessor has already stated they are going to review all these certificate of error applications that are ongoing right now, they've actually in the past month had to turn off and on their applications for certificates of error because they've had these ongoing IT issues. So if you go to the assessor's website, you'll notice a giant red banner across the top saying, "We can't process the certificates of error right now." It has literally gone on and off like three times in the past month or so. Now, what they're going to do is if there is if there's a certificate of error that's applicable, they'll mail the second installment, it'll go out, and then they will issue within typically a week or two an immediate updated second installment. It'll be available online quicker, but it will get mailed out and they will there that's what they said they're going to try to do. Obviously, there's limitations with how much they can get to, and they have to remail all these, but that's what they've stated. So if you filed a certificate of error, which is something you file past the original deadline, it will not show up on the first bill that goes out. However, it should get corrected in short order. That's what they've stated, and that's what they've done in the past. Worst case scenario, you pay it and then it gets refunded. I've seen it sometimes too when they get processed close to the end of the payment window. The lender will pay the tax bill and then they'll process the certificate of error. And then instead of sending the client a check, they'll just refund the lender for the overage and send it right back to them. The lender will get notification immediately. They'll say, "Why did we get paid?" And they'll apply it to the account and then they'll realize and then they'll adjust their escrow accordingly. But that's typically how that's handled. It's done quickly, but most likely will not appear on that first bill that comes out.
In that certificate, and not so we can continue with the program, I just wanted to make a quick question. That certificate of error involves correcting loss of exemptions only, or are there other things that
It's
you put on it?
We're only talking about missing exemptions. So if
Okay,
you turned 65 a year ago and forgot to apply, you
okay,
didn't get your homeowner's exemption, that type of thing. That's for
okay,
missing exemptions only.
okay,
All right.
great. Thanks, Ryan.
So now here we are, assessed value. We talked about this a bunch, but this is the starting of that math problem. It's the high end, it's the base of the tax bill, and this is what we appeal. When I talk about appeals, this is the number we're fighting. I'm not fighting equalization, tax rate. I will check to verify exemptions are on there, but this is the number I argue should be lower. Lower the number, the lower the bill. This is, in theory, tied to the market value of the house. And I say in theory because, again, the assessors aren't chasing sales. So oftentimes in upwards markets, they're behind. That's the case right now. A lot of assessors are playing catch up. The problem is sometimes they get a little aggressive in their attempts at catching up. And that happens. And that's where we, gently nudge them the other way. Um, in Cook, I've mentioned it's 10%. So, add a zero, right? In other counties, just multiply by three. That's how you can go from assessed value to market value or divide by three the other way. And everyone, again, should always review this for an appeal. Cook County, you should always appeal. Other counties, it's a bit different. Um, the assessed value for the market, this is just quick to make sure we're all on the same page with math. If you're buying a house at 300,000, the assessed value in Cook County about 30,000. Other counties, $300,000 house corresponds to about 100,000 assessed value. And again, that's just something informationally to know because your argument for an appeal, the market value can be valuable. Maybe it can also be a sign that you shouldn't argue this in front of your assessor. You buy a house at 400,000 and it's assessed at 100,000 assessment. You maybe just ride that out for a bit and don't try to, draw attention to your purchase. There are counties outside of Cook. I've never seen Cook increase outside of very rare and typically um, insane cases, but nothing applicable here. But outside of Cook County, the assessors will increase and they will increase to market value. If you try to appeal a recent purchase, they can say, "Oh, well, you purchased it for here." And if it was just a normal MLS arm's length transaction, they can argue to go up instead. Most of the time, the assessors don't really want to increase. What they do is they use that as a way to get you to withdraw your appeal, or just to not appeal in general. But that is a consideration, especially outside of Cook. And it's important to just know that because you can do a quick math look at that and see. And if they purchased it, advise them to go to their assessor and talk. Some assessors will help out, some won't. It all depends. But that's really important. Now, exemptions, we've kind of talked about a bunch about this, but these are the main exemptions. There's the homeowners. You have to own the property. You have to live in that property as your primary residence. And you're only allowed one. All right. You can't have multiple homeowners exemptions, even if you're a married couple and you live in two different houses or in two different states. One exemption. It's one exemption. Then, if you have the homeowner's exemption and you're above the age of 65, you're allowed to have a senior exemption. And this is really important to understand. It's just an age, nothing else, because the senior freeze is where income comes into play. The income at this state is about $65,000 or less. Um, and again, you talked about, talking to maybe doing some advocating. This is another thing that the senior freeze should really have a scale up. Right now, it doesn't. Um, and maybe it's something that, you know, should be changed. And the biggest thing with the veterans exemption is to note that talk to legislators about why the other counties don't just grant the exemption up to the amount. Um, anyway, that's a something that could be important if you're ever in an advocacy position. But yeah, disability is a shockingly small exemption. For comparison, it's about one-fifth of a homeowner's exemption. But if you have a disability or you're on Social Security disability payments, those types of things, then you can get an additional small exemption. The exemptions, as I've mentioned, are set assessed values, and that's just removed from your tax bill. And you can apply online. These are two really horrible links to see, but you can apply online at the Cook County Assessor, and you can, Lake County, you can apply online for most. Will, Kane, McHenry, DuPage. If they don't have online, they'll tell you where to apply, and it's pretty simple. The exemptions are extraordinarily important to know when you especially are representing buyers, because if you can, a senior exemption, whatever, a couple $100, let them know that's fine. But there's a senior freeze, it could be four or five, six, $7,000, and the buyer will never be entitled to that, and that's going to be a huge increase. And again, a lot of times, as long as the buyer's aware and the lender's aware and everyone understands what's going on, it's no big deal. However, it's the surprises that cause the problems, especially that first escrow analysis can be a killer sometimes. So it's really important to understand what exemptions are on the property. The benefit to a seller, if they're missing exemptions, it allows them to correct them in Cook County. And the reason I give that caveat is those certificate of errors we talked about are really only applicable in Cook County. You can go back 3 or 4 years sometimes and correct those. Now, in the other counties, right now we're in a window between the two due dates of the bills. Most of them come out in May and their payments are June and September. We're in the middle of that. It's July right now. And if you've noticed a missing exemption on your property taxes, then you can correct that for this year only. For the bill you actively have, most counties will allow you to correct that now. That's it. And what they'll do is they'll issue an amended second installment bill for you. All right. But that's really an important thing to note as buyers, sellers, just check those exemptions. And as realtors, you should be aware of the assessment cycle, because this again is when you're going to see those surprises on those tax bills. Last year, the city of Chicago has was reassessed. 2024 was Chicago. This year, the blue area here, these are the north and northwest suburbs. This area here are all under reassessment. The assessor has gotten to about half of them. I think they got about half left. Um, those are all being reassessed. The south and western suburbs here are going to be reassessed in 2026, and then the cycle repeats. Chicago, north, northwest, southwest, Chicago, and it just keeps going. Most of the other counties are on a quadrennial, a 4-year period, and most of them reassessed in 2023 for their formal reassessment. Now, sometimes they do things a little different, and they'll do a formal reassessment in based on maybe a township or other things. So it is important to know where you're at in the assessment cycle, especially in Cook County, because right now, if you're buying or selling in the city of Chicago, we are prorating based on 2023 tax bills. The 2024 tax bill is not out. However, you're prorating 24 and 25. And at this point, you're prorating over a year of taxes based on a 2-year-old bill, and there's been a reassessment in there. Chicago saw increases between 10 and 100%, depending on the property. Most of them 20, 30, 40% were very normal. And so those tax bills may be set for significant increases, and they're all going to show up in the next month or so. But again, we don't have them yet. And so it's really important to note that. And then if you're buying or selling in the northern suburbs here, and I had one client I literally just talked to this morning who got a 150% increase in this area, Barrington Township. They got a 150% increase. That means the assessment more than doubled, and their tax bill, which was already 25,000, is set to go to around $58,000 um, without an appeal. But if they sell their house and the buyer doesn't pay attention to that, the buyer's just going to be on the hook for a huge tax bill. So it's really important to know that this gets handled mostly by the attorneys, but not having a buyer not realize that their tax bill is going to go from 6,000 to $9,000 or 11,000, whatever it may be, can be a big surprise. And then the lawyer starts talking to them and they freak out and they maybe something that they, you know, need to consider and possibly appeal.
Yeah, Ryan, I want to talk about that a little bit too, and then maybe circle back on a couple points and questions and Angela and Jessica's questions. But one of the things from a lending standpoint, when you guys go out there and you're showing somebody a property and you happen to see a property that has what as an educated realtor is a below market tax bill, the lender, from a qualification standpoint, if the property that you're showing them has got a senior freeze and it's got a senior exemption, homeowners exemption, and maybe even worse is just not assessed properly, we as a lender are responsible to make sure that we're qualifying with reality and what those taxes are going to be. And ultimately, whether it's Fannie Mae, Freddie Mac, FHA, VA, they will all hold us as a lender accountable to, did we do our job to qualify them at what that real tax bill is? So much so that Fannie, Freddie, FHA, they'll send us that loan back. They'll be like, you guys missed it. And that's not a loan that, now that we know what the taxes are going to be, that we're going to take. And so it's important for us from that standpoint. But what's more important is really that the client knows that that $1,200 tax bill is really going to be 48, and they're not going to have $100 a month, but a $400 a month payment, just as an example. So those are things that we have to do from a lending perspective, not because we're mean, not because we're trying to bother you or sale. We're trying to make sure the client is well aware where those taxes are going. And then, of course, ultimately, any mortgage company wants to make sure that loan is going to get sold off as far as that's concerned. Angela talked about a lot of people being at risk of losing their home because some of these tax bills are creating payments that they were never qualified for in the first place. I would say that, if you guys do see some people that are having some challenges with their escrows, we don't mind looking at those letters just to see what kind of went sideways and maybe why the escrows weren't properly corrected. But to explain how mortgage companies pay the tax bills, it looks like this. The bill comes to them electronically. They electronically send one check to Cook County for every property that they are actually collecting tax escrows for. I've actually seen one of those checks from some servicer, whether it was Mr. Cooper or Dove and Mule. It was a massive check, multi-million dollar check, because it was one check on every property that they happen to have in Cook County that was due at the time. Now, since they're automated this, they're writing that check, they have no idea if the money's in the account. They just know the bill's due. And now that escrow will get reviewed typically on the anniversary of when that loan was sent to the servicing company. And that's when they find out, we wrote a check for money we didn't have. So not only does the taxes in general have to go up, but we also have to make up for the money that we actually wrote a check for. So your client's given a couple different options. Hey, pay this huge increase, so we can catch up on the money we already let out the window or out the door, or just write a check for the lump sum, get your escrow back in balance. Again, if you have those questions with the clients that we close with you, certainly come back to us. We'll certainly help out. Um, all right. So let's see here. Is there any chances property will be repealed? Oh,
I can answer that one.
yeah. All right. So wait,
It's
Dan, the one that I was mumbling, I apologize. Is there any chance property taxes will be repealed? Go ahead, Ryan.
no. Next question.
Very good. Glad we were able to tackle that one. All right. Jessica asks a
It's not a
question.
realistic thing in my lifetime.
There you go. So Jessica asks a question. Yeah, certainly not in the state of Illinois. I know there are other states that are considering pulling back property taxes, but I think as a general revenue source, some of those states don't really charge a lot anyway. So it's not as if it's going to impact their budgets because they just don't have high tax rates in general. Now, Illinois, regrettably, we pay the majority of our schools through property taxes. That's not going away anytime soon. So I agree with Ryan, not in our lifetime. Jessica asked Ryan, and this is kind of unique, but it is along the vein line of taxes. Can she combine pins, but then uncombine them later on down the road? So, in other words, just as an example, she's got a house. The house has got a lot next to it, but they sold it to her together. And she would like to see if she can combine those two property into two different pins. Can she do it? Is my first question.
So, first question I have is what county? These processes are actually different by the counties. The real question I have though is why. So, why would you want to? It's a process that takes time, can cost money. Um, and my simple question is usually, why are you doing this? There is I don't really know of any benefit to combining or splitting pins. A lot of it is legacy stuff. The only reason you ever want to split is if you're selling off a portion of your land, right? You have 10 acres, you want to keep 7 and get rid of these 3. That legitimate reason, split them all then. But yeah, the real question is why are you trying to do this? There's no benefit on property taxes. It doesn't really impact anything. The only real question is that, but yeah, you can split and combine pins. Sure, that's not a problem. It just takes a little bit of time or a lot of time in some cases. And but there really truly is no real reason most of the time because it just doesn't do anything.
Yeah,
Especially if
there's
you're
no
talking about
advantage.
combining it and then splitting it again. There's no, I don't, unless there's some specific fact scenario, I'd love to go through that. Let me know. Give me
Sure.
a call, email me later. But yeah, you can absolutely split and combine parcels. I've
So
had, yeah.
yeah, splitting I think makes a lot more sense for commonly. Let's see if I've got another one where Q&A is. So she says, so Cook, she just found out it wouldn't benefit.
Ah, no, that's a great question though. It is. It is it's a smart question. But yeah, it doesn't benefit anything because the exemptions are flat amounts. And so whether or not there's more or less land doesn't really have any difference on things. Um,
Perfect.
But yeah,
There's
there are legitimate reasons to split and sell off portions of your land. That's the most common use for that.
Yeah, absolutely, absolutely. So, all right, Tracy asks, and this is kind of a setup question, Ryan. So, Tracy asks, do you have contacts or processes you can send for appealing taxes in Cook County or Kane County? Well, my contact is a guy by the name of Ryan Schaefges. He would actually help you with appealing in Cook, or I'm
Or
sorry,
DuPage, yeah.
DuPage, Kane County. So he does service the entire area, and we will make sure his contact information is back in the chat again. Ryan, I'll let you. I think we're caught up on. Oh, got it. So I think we're caught up
Yeah,
on questions.
we'll go. Let's go a little.
And
I'll start cruising through some stuff here. When that assessment cycle, when it's when your property is assessed as a buyer, you got to know because again, how do you how do you get properly prorated? Um, I had a client, and this is an example from a couple years ago, but they had a 31,000 assessment. The assessment went from 31 to 68, over 100% increase. And we took their tax bill and their assessment was 220%. And we're like, okay, what are we going to do? I talked it through my client, explained to them. We ended up prorating at 200% or maybe a little bit different. Um, and they had been purchasing over 700, so they didn't really have a clear-cut argument to lower this. Now, that being said, we actually did appeal and win because again, in Cook County, you can appeal below purchase price for in a different argument. You're not arguing the market in that case. Um, but that being said, that, that they had a 200% proration, and that proration ended up being fair to within less than $10, I think, for both the buyer and seller. Um, both the buyer and seller were extraordinarily happy with the outcome. The seller was reluctant at first, but understood, and the seller's attorney explained it to them. And my client was ecstatic because I had given him numbers and expected numbers, and it felt right in line. But yeah, that's really important because you start prorating on a $7,000 tax bill when your tax bill is going to be 14,000 or whatever. It doesn't work for you. And
Yeah.
they knew this because obviously they're buying a $700,000 house. They knew that, and they prepared. They set aside money, and it was, when you said that analysis came out, they just had a lump sum set aside and they were ready to pay it. So it didn't impact them, too crazy. Um, why? I think everyone knows why, but realistically, Cook County has a lot of parcels, 1.83 million and growing. And a lot of those are residential, and there's mistakes that happen. This is all data driven. The assessor doesn't have perfect data. They'll never have perfect data. Even in smaller counties and smaller townships in those counties, there are mistakes. It happens, and we can correct those. And that's really all we're doing. We're making sure that you're paying your fair share. For a new owner, your recent purchase can be a strong basis. It's not by any means like the end of the line. You can lose when you just purchased and you appeal based on purchase price. You can lose. You can also win. But again, you can appeal in other ways as well. For new owners and for new owners, it's really important to understand what's happening with the assessment. And for prospective sellers, just correct your exemptions, correct your square footage, your age. Is there a problem? And obviously, if you appeal your taxes as a seller, people don't really look at what the assessed value is and say, oh, this is the assessor thinks it's worth this and I'm offering this. That's not, no one looks at that. No one considers that. They see a tax bill, the lower the tax bill, the more positive they are. That's all. Um, People always ask when, and this question is impossible to answer because it actually varies on the township level. Right now, King County has 4 townships open for appeal. Cook County has 9, 7, I don't know, a bunch of townships open for appeal. It varies by the township. And sometimes by the county. Will County opens the entire county in about a week. They open the whole county up for appeals at once. Lake County had just started their appeals, and they'll be rolling for the next 2 or 3 months. But that's how it is. It varies. Reach out to someone like me. We can assist you, or you can look up tax appeal deadlines. Some of them don't have it posted, like DuPage. They don't have anything posted yet, at least as I checked yesterday. Um, but they're 30-day appeal windows. You have always can appeal at the board of review. And then if you appeal at the board, you're able to appeal at the state of Illinois. Once the decision is issued, you can say, I don't agree with this decision and take it to the state. The state's kind of the final level. If you don't agree there, it's a whole different thing if you don't win there. Um, the Property Tax Appeal Board, however, is slow. They are an agency that hears appeals after they've been decided by the board. So the board issues their decision, and then tax bills get going. Now, in the meantime, you can appeal to the state, but it typically takes outside of Cook County, it takes on the lower end 12 to 24 months. Inside of Cook County, we're pushing 3 to 6 years, depending on where you are. Um,
So Ryan, how often, Irene asks, how often are property tax appeals successful?
that's a great question. So, over a 3-year assessment period, if I'm appealing for a client in Cook County, my success rate of getting some sort of movement is probably in the high 90s. Okay. Over a 3-year period. Now, that may include refunds at the state level after 3 years. We have no success for the entire 3 years. We get a refund later. Um, but Cook County, and that's why I say you should always appeal because we can win. We don't win all the time. And I will tell clients there's just no case. You're the lowest in your neighborhood, you're below the market. There's nothing we can do. That happens. It's very rare, but there's always someone in the neighborhood who's the lowest. Um, but yeah, it's very often. Now, outside of Cook County, my success rate is very different. It's also my appeal rate is very different. In Cook County, we can often make an argument. Outside of Cook County, it's a completely different approach, and that's why a lot of attorneys don't deal outside of Cook County. because the success rate is lower. My DuPage County success rate is probably 30 to 60% depending on the year. Lake County, my rate has gone anywhere from 25 to 60, 70% some years. Lately, the past 2 years, my Lake County success rate's probably been 25, 35%. It's been low. Um, but I don't charge up front. I don't charge if I'm unsuccessful. A lot of attorneys work like that, and it's always a net positive. If you find someone who doesn't charge you up front, some of them charge nominal fees, 50, 100, $200 up front. That's if you go with them, you're going to be out something, but um, that's pretty much everything. My last slide is just a quick best practices. Check your exemptions, buying or selling. Note when the reassessment is for your property that you're buying or selling, you're listing. It's really important in Cook County. And again, note that you got buying or selling in Chicago. Really should look at those assessments, and encourage all your clients, buyers, sellers, just anyone to appeal. And I always throw this out to any realtors I talk to. If you want to be like throw a little value add in there, just say, hey, I was talking with this attorney. He appeals property taxes. Make sure you're doing that. Here, you can contact him, do it yourself. But it gives you a reason to reach out to your client base, get back in touch with them, and get your face in front of them again in case they're thinking about buying or selling. If you
There,
got any questions, obviously, thank you. And I
there
appreciate
you
everyone
go.
listening.
Yeah, we're gonna wrap this up on time. A couple things for you guys. First of all, thank you guys for coming out. Our next class goes back to a lunch and learn. It will be virtual, and it's going to be on construction lending. We're going to have Shan Lassig out here that runs the cross country mortgage commercial division, and we're going to have some builders as some guests on that panel. And we're going to talk to you about how to work with your clients to get them to build their dream home on a piece of land that you find them if they can't find an existing home. So Tony will make sure that all that the invite goes out. I believe that class is August 19th from 12 to 1, and that'll be our lunch and learn. Guys, thank you for coming out to this. If you need anything with regards to mortgages, somebody that needs to be pre-qualified, pre-approved, you have a loan that maybe is going sideways on a transaction, we're also very good at rescue loans. And of course, if somebody just wants us to kind of take a peek at their statement, make sure their escrows are right, Ryan and I will team up to make sure that they're being billed properly. Thank you guys for everything. And as always, thank you very much, Tony, because none of this happens without you. We appreciate you greatly. You guys make it a great day. And Ryan, thanks again.
Thank you all for coming. Appreciate it.
All right. Bye, guys.